This is the FCTO Daily Forex News Report for the 16th of April 2013. Risk aversion has dominated the markets so far this week as concern over Chinese growth triggered a sell-off in global equities. Further weight was added in the US session on news of explosions at the site of the Boston Marathon. The Dow closed 1.8%, 265 points lower at 14,599, while the S&P 500 dropped 2.3%, 36.49 points to 1,552.4. Free fall in gold continued as it reached as low as 1,321.5 compared to last week's close of 1,476.1 and the near 1,600 level in early April. Crude oil also dropped to as low as 86.06 compared to last week's close of 90.66. In the currency markets, commodity currencies are under broad-based pressure this week, with New Zealand dollar Japanese yen down 2.51%, Australian dollar Japanese yen down 2.45%, and Canadian dollar Japanese yen down 1.48% so far this week. European majors are relatively steady thus far. Technically, the sell-off in yen crosses seems to have halted. US dollar Japanese yen was held slightly above the support level of 95.74 and recovered. Euro Japanese yen was held above the 123.86 support, and British pound Japanese yen was held above 145.91. The recovery in the mid-Asian session suggested that the selling climax is temporarily over and would expect some more upside ahead. However, it should be noted that the Japanese yen is in near-term consolidation, and thus any upside attempt would likely be limited by last week's highs. A key event to watch is a G20 meeting later this week to see if there are any comments on the yen's weakness. Talking about the yen, European Central Bank President Mario Draghi said that the Bank of Japan's massive stimulus program announced earlier this month is determined by domestic policy considerations. Draghi emphasized there is no currency war. Nonetheless, it's reported that the EU will talk about the lack of credible medium-term fiscal consolidation plans in Japan and the US. Earlier, the US Treasury urged in a report last week that Japan must remain orientated towards meeting respective domestic objectives using domestic instruments and to refrain from competitive devaluation and targeting its exchange rate for competitive purposes. Japanese officials have reiterated that the policies were aimed at getting Japan out of deflation rather than driving down the yen. The Reserve Bank of Australia's minutes for the April's meeting noted that the outlook for inflation, as currently assessed, would provide scope for further easing should that be necessary to support demand. The central bank noted that recent data suggested that interest-sensitive parts of the economy were responding to the historically low levels of rates, and it remained likely that this had further to run. Meanwhile, the factors weighing on the economy, including the high exchange rate, the waning growth of mining investment, and fiscal consolidation, were likely to persist, and it emphasized that the key issues were what the balance of these factors would turn out to be. This morning we get consumer price index details from the Euro area and the UK, as well as the German ZEW index. We expect a moderate setback in the ZEW expectations, reflecting that sentiment and forward-looking data have become more mixed recently. In the afternoon, the European Central Bank's President Mario Draghi speaks to the European Parliament on the ECB's annual report. The US session will be interesting, with the release of US inflation, housing starts, building permits, and industrial production. Core CPI is expected to increase by 0.2% month on month, with increasing service prices as a main contributor. The fall in oil and gasoline prices is likely to influence the headline reading heavily, and we believe it will come out at 0% month on month. Housing starts and building permits are in for an increase as housing construction tries to keep up with demand. We expect industrial production to have increased a modest 0.1%. There are also a number of potentially interesting Fed speeches. Dudley, Duke and Coca-Lakota. We expect Dudley to comment on the prospects for the quantitative easing program. This is of special interest as the minutes of the March Federal Open Market Committee meeting were more hawkish than expected, while the recent payroll reports should pull in the other direction. For all the news affecting the Forex markets throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.